Hello, everyone. Welcome to today's live session. I wasn't paying attention and missed the 12:30 start by a few seconds. If this is the first of these you've seen, we do these. Try and do these every day at 12:30, and it's just a quick catch up with the major markets, what's moving, what's going on, and what are some of the levels to watch out for. We're going to start today with the pound. This has been very much in focus the last couple of days because, of course, of Brexit and because politically things are moving. Anyway, whether that means that Parliament is going to pass a Brexit deal, whether it means Brexit gets delayed, whether it means we have a second referendum. There's been a lot of chat about potential outcomes in the last few days. And from a pound point of view, financial markets like it. So we've seen the pound push up to its best levels since September last year. So let's get started. Let's just drag this over and bring this up. Okay, so the pound against the dollar. So just to put it into perspective, maybe let's flip this over to an hourly chart. So a strong January and then spent much of February in decline, or the first couple of weeks of February in decline, because there was still so much uncertainty about Brexit, with the date for leaving less than 2 months away. So the market, pound US dollar, has gone from 132 third week of Jan, briefly below 128. And then over the last couple of weeks, or the last week and a half, I should say, we've seen this recover. And it has pretty much taken off a lot this week. We've broken above 131. We're currently trading just above 133 against the dollar. So we've seen the pound rally by about 500 points in the last couple of weeks. That's a sizable move. If we take this out and view this on a daily basis, you can see where it puts us. So it puts us, actually, it looks like we have just about nudged through the September high. So the September high was 133. So we're now back to levels not seen since July 2018. So what's that? 7-month highs for the pound against the dollar. And I think it's interesting here, and it's worth a bit of a pause here, because I think it's too easy to get carried away, I think, in the hype of a move like this and think, okay, well, the pound is going to go to the moon from here, because we've seen such a big move. And I just think maybe we need to have a bit of a pause and look at where we are based on where the market's been trading over the last 12 months. We did see the pound last year, April last year, it did get as high, almost as high as 144 against the US dollar. So that's 1,100 points higher than we are now, 11 cents higher than where we are now. But we saw that strength come back in. Strength for the US dollar, I should say, from April last year, and the pound get pushed lower. And we left lots of obstacles on the way. And this is really what I'm looking at now. We've seen this strong bounce back for the pound, really strong bounce back this year for the pound against the dollar. We're still not sure what's going to happen with Brexit, but we do have some hurdles coming up. So we have the highs from, when was it? July last year, around about 133.70. And then we had the highs from June last year, just ahead of 135. So I think we have got some real hurdles within a couple of hundred points above where we're trading now. So that's not to say I don't think it could squeeze a little bit higher, but I'd just be starting to think about, okay, we've seen this big move, this 500-point move over the last 10 days. Just how much is there left in the tank for the pound against the dollar? So it wouldn't surprise me if we saw, maybe some of this momentum starting to fade. At the moment, it's still strong. At the moment, it'd still be inclined to be, a buyer of the dips, pound US dollar. If we picked up on the recent trends, off those lows from the middle of Feb, we've got lots of support coming in. 130.50 is a big level. It's been a long time, relatively speaking, trading around 130.50. So if we saw a deeper sell-off from here, that's one level to watch. So I don't think, if it starts falling from 133, we won't see 133 again. I think there'll be plenty of people who've maybe missed out on the rise over recent days, be only happy to be a buyer. And we'll just question from maybe a more medium-term perspective how much there's left on the upside from here until we actually know what's happening with Brexit. You know, if it turned around on Friday and they said, you know what, Brexit's getting cancelled, that's it, we're overruling everything, clearly it would go through the roof, then the pound you'd expect. But I think because there's still so much unknown and so much indecision and how quickly sentiment can turn, I just think it may start running into some problems up here. So let's see what happens. You know, still strong at the moment. In the short term, any weakness back to, you know, I don't know, what the low is 130, 150 down to 130.50. Looks like a buying opportunity, but it wouldn't surprise me to see it under a little bit of pressure up here after the run we've seen. So it's very interesting. After a few days last week have been really dull, we're seeing things perk up. Let's take a look at the euro against the dollar. Then we'll look at euro sterling. But so euro US dollar, again, we have seen a comeback. So we're a bit of dollar weakness the last couple of weeks as well. So we've seen a comeback for the euro from about 112.40, trading as high as 114 yesterday and today, which again is the best levels in a couple of weeks or so. But it just can't seem to get much momentum. You know, I think it is still positive, euro against the dollar. You know, it still looks like a market that maybe we should be buying the dips. Lots of support from 113 through to 113.50, that sort of area. It has broken out this downtrend that's been in place since the end of Jan, the first couple of weeks of Feb. So I do think we will see it move higher. It just doesn't have anywhere near the sort of momentum that we're seeing in the pound. Clearly, the pound is being driven by Brexit. That's the big driver there, not just US dollar weakness. But euro, US dollar is having a go at trying to break higher. But we really need to clear 114. And then I think we can start looking at the potential for a run back. It's only another 100 points, but back up to the highs from the end of Jan, up around about 115. So positive, but as usual, struggling to build anything in the way of momentum, euro, US dollar. And before we move off currencies, let's take a look at the euro against the pound. So it started breaking lower yesterday. So we were seeing euro weakness yesterday. It's continuing today. So we're now back. The euro is at its lowest level in, 21 months against the pound. So we've been 86 had been a floor for what feels like forever. But, you know, going back to May 2017, whenever euro against the pound sort of dipped down below 87, you'd see buyers come back in and the market got lifted back up. We are seeing the euro breaking lower against the pound. So this is a pretty bearish move. I did wonder yesterday whether it would end up being a false break. At the moment, you know, we're moving lower again today. So it is a market that is under pressure, being driven by that pound strength, you know, and I think if we were going to see a much deeper sell-off, you know, I think perhaps the logical target is for a run back to these April 2017 lows around about 8,300. So euro sterling under some pressure off the back of that move we've seen in the pound over the last few days or so, driven by Brexit. Okay, so that's that one. So still strong. The pound is still strong. Still be inclined to be a buyer on dips, but just wary. You know, if you thought that there's going to be hundreds and hundreds of points of upside from here, I would just be a little bit concerned about that view, because we do have these problem areas left from last year. Let's see what happens. Now, crude oil, we'll take a look at oil and the price of gold. So just to remind ourselves, the big picture view in crude oil, where we are. So we had the big sell-off from October from $77 a barrel down to 42 just before Christmas. We've had the bounce back since then, and we did have that big sell-off on Monday. So let's just pick up on that. So that was just before we started the live session on Monday. That was inspired by a tweet from President Trump saying the oil price is too high. OPEC needs to sort it out, blah, blah, blah. We saw the price of oil drop $2 on Monday, and it was the tweet from Trump was the catalyst behind that. And I was saying on Monday, just to watch where it stops, see if we think the buyers will come back in, because whenever we've seen oil sell off, we have seen it snap back, and we have seen the move that started late yesterday, 9 o'clock yesterday, really, finally breaking above the highs of the day. A bit of a drift back into yesterday's range today, but here we are. We're up at 56.70. So we've rallied almost $2 off the lows we saw on Monday. So for my money, the target is for a run back up towards 58. So if we saw the inventories are out this afternoon, so 3:30 this afternoon, every Wednesday we get oil inventories released, and it's basically how much is being stockpiled in the US. It comes out every week. Normally see volatility on the oil price. If we did see it weaker this afternoon, I'd be looking for a buying opportunity with stops underneath the $55 lows for the week. So it's a short term expecting a snap back to 58. But going back to that daily view, a bit like the pound, I mean, obviously completely different markets, but a little bit like the pound, where oil has come an awful long way. It's bounced back more than 30% off those lows. And I just wonder how much is left in the short term, because 58 to 60 was something of a barrier in November last year. Okay, so if we're going to see oil start running out of steam, maybe over the next couple of weeks or so, if it starts pushing back to 58 and 60, maybe we'll see people thinking, well, maybe we should book some profits. Maybe we've seen the market switch around up here. But in the short term, it does look like after the weakness this week, we could be gearing up for another look at 58, the highs from the end of last week. Let's take a look at the gold price. I think it's been a bit dull, actually, gold. So again, big picture for gold is going back to August of last year. So the lows at 1160 were set in August last year. Since then, it's been recovering. It's only been within the last week or so, it hit a fresh recovery high. So traded back up to where it was in April last year. And again, for gold, that trend is still up. Any weakness still looks like a buying opportunity. But I think we just need to be aware of this big problem area from about 1380 down to 1360 for gold. Gold has not been able to get above there for 2.5 years now. It's been a real area where the sellers have come back, and we've eventually seen a half decent sell-off in gold. So for me, we could see a bit more strength from up here. Maybe in the medium term, back up to test the sort of 1360, 1370 area. Let's see what happens. But in the short term, if we flip over to an hourly chart, it's not been the most exciting of weeks so far for the price of gold. But if we're short term trading it, 1320 from the 21st of Feb has been a low. So 1320, I think, is an important level in the short term for traders. We've seen a couple of pushes back to the mid 1320s. We've seen buyers come back out, but it's been pretty sideways overall over the last week. I think if the price loses 1320, the risk is we'll see a pullback to the low 1300s, and I think that could be maybe the better buying opportunity. Okay, so a bit directionless so far this week. Let's see what happens. And finally, stock markets. I think yesterday in US markets, it ended up being a bit of an inconclusive day. We didn't see the sort of range that we'd had on Monday and Friday. But again, lots of these markets at the moment, considering the moves we've seen at the beginning of this year, are pushing back to levels that could be a problem, and probably none more so than US stock markets. The Dow has rallied more than 4,000 points. So what's that? It's about a 15% move, actually, maybe a bit more from those lows off December. So a stock market to move 15% in 2 months is a major move. We're back up now to the highs. I think the big levels to watch, the December highs at 26,000. And after that, it's the November highs ahead of sort of 26,300, that sort of area. So if stock markets are going to start rolling over and weakness coming back in, then we are here. We're seeing it's only been a few days, but we're seeing a bit of nerves this week. Let's flip this over to an hourly chart, but nothing too drastic just yet. On Sunday night in Asian trade, we saw the US indices gap higher and then push higher briefly during Monday, the first hour on Monday, sold off. And yesterday, as I said, a pretty inconclusive day. Yesterday didn't push out to the highs from Monday, pretty much held over the lows from the day before, and have just dribbled around. So still positive. I think that the big trends over the last couple of months are still up. A big level to watch on the Dow. I think the lows from last week around about 25,750. I think if we start breaking below there, there's maybe the risk of a deeper sell-off. But for now, you can see the trend. You know, I'm scrolling back here to those lows. There we go. So that's been the trend since just after Boxing Day. You know, when we're still very much within that, you can see how inconsequential the last couple of days look based off the back of that. You know, we're just seeing sideways trading, nothing really exciting. But I think maybe if we start slipping below 25,700 on the Dow, we'll see the risk is for a deeper sell-off. But for now, sentiment does appear to remain positive. We just need to be aware of these major levels, I think, on the daily chart. To bring it back to the European markets, we'll take a look at the DAX, because the DAX is always an interesting one when it comes to doing its own thing. So let's take a look at that. And again, if we flip this over to a daily chart, here we go. So on the DAX, we've had a bounce back of about 1,200 points off those lows. But like these US markets, we're back to levels 11,750 to 11,870 that proved to be a real problem in November and October last year. So again, you know, the recoveries are still going, but we just need to be aware that we're back to levels that ended up being a problem. You know, so I think, as I was saying earlier this week, maybe the next few weeks will be interesting for stock markets, because if we're going to see a real correction come, you'd expect it to start building ahead of these major levels. Okay, so maybe we'll see stock market volatility step up a few gears over the next couple of days. So that's it. I think the immediate level to watch, I think for this afternoon for me, it's oil. Price of oil. We've seen that bounce back off those lows. We've got the oil inventories out this afternoon. Let's see. Okay, it's still moving higher. If we get a pullback, I think it looks like a buying opportunity. And of course, the pound, because it has had, pound against the dollar, has had a rocket put underneath it this week. It's still a market that is strong at the moment. Any weakness in the short term looks like a buying opportunity. But on the daily charts, just be aware, we've got some big barriers, a couple of 100 points above where we're trading now. Someone's asked, can we have a look at Coca Cola? We did have a look at that earlier. Was it last week, wasn't it? Because it had a profit warning from memory. Let's have a look at Coca Cola. Okay. Let's have a quick look at that one. Let's flip it over to the daily chart. So we had, I was saying it was interesting last week because we'd had this period of sideways trading. So this is the US listed Coca Cola. I think it is listed in the UK as well. So we'd had this period of sideways trading and the market moved higher. October last year, we had this poor results, whatever it was last week. And this, I was saying, was the opportunity. If it sells off and we see the buyers come in, do we see it as a market overreaction? At a really weak finish yesterday. So for my money, it still needs to hold above these lows, just below $44. You know, pretty weak finish yesterday. If we flip it over to the hourly charts. So I'd suggest, you know, maybe the short-term trade, the short-term aggressive trade, is to look to see if yesterday's lows hold. So yesterday's lows on Coke were about 44.60. It ended yesterday at 44.66, so just 6 cents above the lows. So I think looking on the hourly chart, it is sort of bounce or bust time if you were short-term trading it this afternoon. And on the daily chart, I think the big levels to watch coming in around about $44. Okay, but we did see this strong bounce back last week, but clearly this week the market hasn't been that convinced. So I think 44.60 for short-term traders is one to watch, and $44 on the bigger time frame. But we'll start wrapping things up there. We will do it all again tomorrow. We'll see where markets are. So pound still strong, oil has bounced back, and everything else has been a little bit quieter. But let's see where we are tomorrow. As usual, to find out more information about the company, go to the website, Capital.com. Any questions after watching this, you can leave a question in the comments on YouTube, and I do check back, or just drop me an email directly, david.jones@capital.com. Okay, thanks very much for coming along, and hopefully see you tomorrow.